Market volatility has created quite a frenzy in the industry, making people wonder what will happen in the coming weeks. Good evening and welcome back to our Rex Fuels channel, where we discuss issues and trends facing the oil and gas industry. If you're new to the channel, kindly like, subscribe, and share to stay up to date with the current trends. We welcome back Pranav Kant, a seasoned expert in the oil and gas industry. Welcome, sir.
Thank you. It's a pleasure to be back again after a brief hiatus, if one may say so, of a few weeks.
Yeah,
But yes, here we are again.
we've definitely missed your insight into the market.
Right.
My first question to you today is, last week Brent fell below $90 per barrel before surging by more than 3% in a single day as a result of the Russian stoppage threat to Europe. Do you expect a crude rally to resume in the coming week?
Yes, crude recovered a bit later part of the week after declining to something below $88 dollars to a barrel for the Brent, and currently it's at about 92.3 as we speak. But this bounce is largely on the fears which are likely to be applicable later part of the year, not immediately, resulting onto the Russian threats on the price caps, which was not entirely unexpected. But the markets are still really waiting or struggling to see any long-term bullish news, largely because on the demand side, the situation looks less than pleasing. And the big factor is the data from China. Their crude imports on a YTD basis are down by about 4.7%. And this becomes very important because this is first time in 20 years, mind you, 20 years, that China is expected to decline in terms of its crude oil consumption. And just last month, for the month of August, their imports were down by 1.1 million barrels per day. So that's the kind of deficit, demand deficit arising out of China time soon, with the continued lockdown and very bearish economic macro data. So the China story is going to drag down the markets. That is one. And what is becoming more and more evident is the kind of demand destruction scenario in the European Union and the whole of Europe. So there, things are not looking good than what the media seems to have published so far. So looking ahead, these two factors would be the major bearish trend. So we do not see prices really moving anywhere close to near $100 as many traders were expecting and many analysts were expecting. We expect continuous bearish trend, and sub 90 is likely to be the new normal now against what we have very accurately in hindsight predicted about the 90s scenario of crude hovering below 90 for the near term.
Well, that was quite unexpected. My next question to you is, prices of petrol products, especially fuel oil and bitumen, turned weak. Do you see any recovery in prices?
Yeah, this is interesting because it's fuel oil and bitumen. They have they follow the crude oil prices with a lag. And the prices from the Middle East have also really come down. So the likely to remain subdued, although we expect the Indian refiners to post a modest increase on the 15th and 16th by about INR 400 or thereabout. But in terms of sustainability, I guess we are still more likely to see lower prices instead of bullish prices. But one good factor there emanating onto the bitumen side of the market is the demand signal appear to be very robust from it. That might impact, but pricing is not really impacted as far as the Indian National Oil Company's pricing model suggests. It follows more the import parity pricing, and the Middle East continues to be depressed in terms of bitumen oil, fuel oil, and the vacuum bottom. So longer trend is likely to be remaining bearish.
Thank you so much. It was great having you here today. And thank you again for your time. I look forward to our next interaction.
Yeah. Thank you. Same here.
And thank you all for watching. Continue to subscribe to the channel by liking and subscribing. See you soon.